Today I'm going to be going over price action on the NASDAQ and how I enter my trades. All right, these will be my A plus setups looking for areas of liquidity. All right, so we got this is September 18th, 2023, and our just to kick off on Monday, I have the previous week high and the previous week low noted. Also, that previous week low also stands as a previous day low. So either way it goes, that's area of liquidity. So normally I wake up, do my thing, hop on the charts around 6 a.m., 6:30. My entry time frame, I like to enter between the M5 and the M3. So I noted M15 FVG. I do trade ICT smart money concepts. It just sticks with me as previous video. And I'm bearish this month. As stated in my last video, historically the indices perform horrible for the month of September, and it's just playing out to a T. So we're here play. We just watching price. Just kind of looking for something kind of energetic to the downside. I like to see some type of displacement and break a structure. Okay, boom, right here. We're starting to break down. So once again, I am on a lower time frame. I got a clear break of structure, and these candles are closing with solid closures to the downside. So I'll be looking to enter off this FEG right here created on and we're on the M5 time frame. So, and this will be an aggressive entry. So I'll bring up my short tool, and my target will be the previous week's low. So you can either place your stop right here, which would be a 14-point stop loss. I like to let them breathe a little bit. There's a 20-point stop loss, just almost 20. And we will be looking to target. So we got a nice little we got a nice little 1 to 2.5. All right, so 1 to 2.5, and once again, entry requirements I have already stated. We broke structure, and we're currently breaking down. Boom, we're tagged in, running up kind of high. Not too worried about it. Still good. Oh yeah, we in there. We can actually get another entry right there. Oh, but we could. Beautiful, beautiful delivery. Boom, price delivery. The one thing about it, man, I got trapped at the bottom too many times trying to continue to trade price action after it runs through the lows. It's not even worth it. That's a nice little 1 to 2.5 trade just to even kick it off before the actual New York Open. And if I normally hit on a good trade like that, I kind of just watch the New York Open, and then again, it's on Monday, so you got to play it careful on Monday, especially when we just opening. So we'll let price. So see how we ran the previous day low, which is also the previous week's low. So that it was stop orders down there pending. So we ran them, stopped those people out. That is in liquidity engineered. So we'll just let this play out. See what price do. 7 a.m. We starting to shift up. 9:30, no trade zone for me. I do not like to trade the 9:30 open. It's normally too much manipulation. Look at that. Now we just ran the London highs, pulled back into an FEG. Price action too sloppy. I couldn't trade that. No, thank you. Ran a low. Damn, run low again. Nah, there's no way we're trading that. So for me, I like to trade the New York AM session. The PM session, if we got fast market conditions, and fast market conditions is we're normally just trending one way. Every now and then I'm able to catch a PM reversal, but this price action right here, we're good. So so we'll go to the higher time frame. And we're just gonna fast forward price to the next day. Okay. It's not my trading time. That yeah, we just kind of just watching price action. Trading for me, man, it's a lot of waiting around. Okay, impulsive move up. I see that we ran the London high, the intraday high, which is also was equal highs. So let's see if we done running price up. Okay. Do we want to trade up to here? I like to hop on a lower time frame. There's the M3. All right, we still waiting. Okay, got a market structure shift, impulsive move down. So right here, this is a prime example of a breakup structure right here. Too easy. Right here is the breakup structure. Once again, we on the M3 time frame. Left behind the FVG. And also, if you want to get real fancy with it, man, you could drop a fib on this since we broke structure. So high to low. Ideally, you want to get in above the 50. But I do kind of like to get in aggressively. So if I get in on this FVG, I have to account for this up here. So the stops will be up here. We'll roll our stops up there to the top. So once again, we find our short two. Entry's gonna be right up here. Once again, look at this. This is not a crazy stop loss. 16-point stop loss. And once again, we will be targeting the London lows. Nice little, oh, hey, that's almost a 1-3 trade right there. Press play. Let's see how this plays out. Boom, we're tagged in. We almost traded to the 50% of that FEG, also known as the consequent encroachment. Okay, boom, shift the structure again. We also can get another order flow entry drill, institutional order flow entry drill. Need to. See how we looking. So that's what you like to see. When once you first enter the trade, your trade just start running away immediately. That's what you like to see. Right here, stops would have already been a break even. If not, partials taking. Look, TP hit. And this is TP hit right before the New York Open. Now, if it's happened to me before, my target point hasn't been hit before the New York Open. All I do is protect the position, move the stops just enough to cover commissions, and it is what it is. If I get stopped out, I get stopped out. Normally at 9:30, I'll get stopped out. So I like to take profit. Ideally, I would like to take profit before the New York Open. But those are my requirements for entry. Once again, I run on liquidity. So look how we ran the equal highs, the intraday London highs that were set. Displacement down to the downside. So that displacement shifted structure down, broke structure here, broke structure there. Breaking structure on a low time frame. We on the M3. Left behind FEGs, aggressive entry right at the beginning of the FEG. If you do enter on this FEG, you're left behind too. You have to account for the one above it as well. Price didn't trade up that high, didn't trade above the fib as well. Once again, an aggressive entry, and then we just melted down. Price just runs away. Normally, within the first 5 to 10 minutes, I like to see price just run away from my entry. If price kind of tends to play around with my entry, a lot of times I'll cut the trade. So Until the next time, trade smart, trade with a big plan. It's your boy Prolific, and I'm out.